So we are talking about the outlook of 2013, and a lot of things we want to think like property manager. And why I think like property manager is because the exact sharing I'm going to share with you in this exact moment is the very same input I get from the chairman of Malaysian REIT Association and the Axis REIT manager. So this is what I just summarized that for everyone. What he says that is what is nothing surprising. He says that with the current volatile market, equity market, Mr. Stewart Lebroy, he believes that Malaysian REIT has found a sweet spot with both foreign and local investors alike. This is because I asked her what are the sentiment of REIT, not only for retail, not only for local, how about foreign, how about institutional investor. And he said that we see a listing of one of the crown jewels, okay, with very iconic properties like Pavilion, Mega Mall, okay, like we talk about IGB REIT. And next year, plans are definitely in the works for KLCC, okay, to come up with another REIT. So he says that with all those big properties being REIT, okay, this has enabled all investors to participate in the ownership of some of the best commercial properties in Malaysia. So the current trend, the outlook is that he say buy and hold. If you already have a position, he advised that you just buy. Okay, you buy already, you just hold on it. And in this flight to safety, okay, safety because the market is very volatile, okay, we have witnessed a compression in yields. That is, in layman terms, your yield is dropping because your price is pushed up, your price is going up. Why the price is going up? Because a lot of large corporation, institutional investors, they are buying into that. Okay, they see the potential, they are buying into that. So it is trading at a premium, okay, which means, in other words, a layman words is to say it's overvalued. Yes, that is true. Okay, it's a bit overvalued for a lot of REIT, especially the retail REITs. And he said compared to Singapore, Singapore is way more overvalued. But I'm not going too detailed into that because I'm not actually looking at the Singapore REIT. So he further add the REIT manager in Malaysia that display a strong sense of commitment to the shareholders in providing growing dividend yields and increasing values to the shareholders. Unit holders like you and I, if you were to invest in REIT. And he further add that such transparent behavior will actually set a good example in the REIT market. So this is a very detailed outlook of the REIT, okay, and we are going into retail REIT. I asked him what are the retail REITs outlook, and he replied me that retail REIT is still showing a good growth prospect in rent, but it is hard to grow a portfolio due to a limited stock in the market. Having to say that there is so much shopping mall you can have in our country, so it's too much saturated at it. I cannot imagine if there's another shopping mall coming up in Penang, Laos. You can see how it will be too saturated, huh?
Yep.
Yep. And if there's a question by one of the reader I heard, I see from the note you sent me now, and this Michael Yee, he say what are the top 3 REIT, and when you ask me top 3 REIT, I would say that top 3 instead of market capitalization or performance. So for performance wise, there's a lot of factors to consider, but if you were to ask about the market capitalization, as in whether the REITs are huge or small, right, in terms of the asset value, then these are the top 3. The top is still being Sunway REIT. I think the contender to that will be the IGB REIT, which just got listed in September. And the third one would be the Pavilion REIT, with Capital Malls Malaysia tagging closely behind. There's no surprise that this REIT is actually the leading 4 because it actually owns one of the very huge commercial property, which is retail shopping mall in Malaysia. And the second thing I asked Mr. Stewart Lebroy is the fact that how is the office REITs doing, like Tower REIT and UOA? And he replied me that with 25 million of square feet coming on stream in the next 2 years, having to say that there's more and more and more of office spaces supply coming up in KL and the Klang Valley, and there's only so much office space that people can use over the next year. So he says for office REIT, it is definitely oversupply. Okay, so if you are already in UOA or Tower REIT, so you want to watch out for that, because if what happens if there's an oversupply, means supply more than demand, your price will drop, right? That's just very normal. Yeah, can see? Yeah, that's very normal. So the rents, he said that the exact rent, he said the rents could soften. Okay, let's go to Star Hill. Okay, Star Hill is probably one of the hotels and hospitality REIT that we talk about in Malaysian market. And they say limited quality buy, but room rents are increasing. Okay, and we move on industrial REIT, where he is the CEO of this Axis REIT industrial REIT, and he's very happy to say there's a lot of opportunities, the ample of opportunity to actually grow in these industrial assets. So Atrium REIT and Axis REIT, they fall under industrial REITs, and Quill Capital, to a certain extent, they are also industrial REIT because they have those warehouses and industrial property under it. So I said for industrial property, the rents are increasing because it's due to limited supply coming into the market. And it is exactly the reverse compared to office REIT. And he furthermore want to add that in Johor, the Iskandar area, the industrial sector is actually booming. And I hope this answer the question. You have Felix Ngui and Stephanie Au. And he further add that on Axis REIT, they are actually focused more on industrial because they have a minority of office lots inside that Axis REIT as well. But they are actually focusing on industrial property, on acquiring industrial property. Axis REIT is one of the best REIT, one of the best REIT manager in Malaysia.